Hey everyone, Matt Turman here with Susquehanna Insurance. And what a ride 2022's been. Just when we thought we'd gotten through 2020, 2021 was just as crazy. And here we are in 2022 and things have not stopped. Each week seems like there's something new and we felt it in the insurance industry. So today I'm going to talk about the 3 things that have changed in auto insurance in 2022. The first thing that has changed is, I guess we're going to adopt what everybody else is saying, the new normal. What is the new normal in the insurance world, in the United States, in our communities of Lancaster and Lidditz and central Pennsylvania? What is this new normal we keep talking about? And so in 2020, we all know that we got locked down in March and literally auto claims ceased to exist. People weren't on the roads, and so there was no accidents. And the cars that were on the road, there were no other cars for them to run into. And so auto claims dropped dramatically. Insurance companies then said, hey, this is great. We have our funds here from the claims not paying out. Let's give those back to our policyholders, because a lot of people are home right now struggling with payments to make ends meet. People were laid off. And so most likely you got a payment from your insurance company in the form of maybe a few $100 check for a few months premium, which was great to help people out, but that didn't last very long. And insurance companies realized that as soon as the restrictions were lifted and people could get back on the road, things got crazy. Maybe you've even noticed it driving around Lancaster, that it seems like people's aggression and driving tactics and what they're doing on the road has gotten crazy. And it's true. Insurance companies and these telematic companies and people have proven that driving habits have gotten incredibly and increasingly worse than they were even pre-pandemic levels. And things such as speeding, such as drinking and driving, that's increased a lot since 2020. And so a lot of these things have increased, which leads to more accidents. So the loss ratio in 2021, or in 2022, the second quarter, is the highest it's been in 20 years, which is saying something and crazy. It's up. It was at 78.4%, the loss ratio in quarter 2 in 2022 for insurance companies in the United States, which is really high. They want to be below, 60% would be ideal for most insurance companies. And so that's running really hot, which means they're making less money because they're paying way more out in claims than they're bringing in premiums. Also, they saw a 10% increase in traffic fatality in 2021. Those numbers in 2022 haven't fully come out yet, but they're looking to be maybe even higher than that in 2021. And that is not great, that's a 10% increase. And they're even saying that has led to people being crazy drivers and has impacted more pedestrians being killed, more bike riders being killed, and more motorcyclists being killed. Whether that's people on their phones more or just being more aggressive or impatient, we don't really know what it is, but the numbers are showing us that people are driving crazy and loss ratios are going up, so there's more accidents, and the severity of claims are going up, and the number of fatalities are going up. So it's not a very good picture right now in 2022 for the new normal. Hopefully that changes in 2023 with maybe driving habits, people calm down a little bit, but the new normal in 2022 is that people drive like crazy and you need to watch out. The second way auto insurance changed in 2022 is that the cost of repairs went crazy. So in 2020, we had the shutdown. 2021, we had all of the backlogs and logistics and the ports being backed up, and you couldn't get anything, whether it was a couch or whether it was a new truck or whether it was a piece of paper even. It's like everything was backed up like crazy. And so that has spilled over to 2022. And the cost of insurance repairs have gone up dramatically for your cars. And so they were saying that 43% of auto repairs, an increase of 43% in the repair cost for cars in 2022, which is a large number and way more than inflation. So we're seeing inflation in the news, but the rates of what the repair costs are on cars is even surpassed that, and that's 43% for car repairs in the United States. And then 32% increase on parts. And so you need a new bumper, you need a new drive shaft in your car, you might need new lights, you might need new who knows what. Those are up 32%. which is also significantly more. So that on top of the cost for just repairs in general with labor costs, it is an expensive time to be in the auto repair business for insurance companies. And just even what people don't think about is that repair costs are now an average of 18 days for a collision repair. So if your car's in the shop, there's an average of 18 days it's going to take to get that fixed up and back to you. Most insurance companies will provide a rental car for you. And so in that period of time, it usually was like 5 days maybe that you would be in a rental car and then back in your vehicle after it's been fixed up. Now you have a rental car for those 18 days versus 5, which has gone up dramatically. Maybe you've seen it too, that even rental car prices have gone up because they were in a shortage of vehicles. And so rental cars have been more expensive, and the time that you're in a rental car has gotten more and longer. And so you put those two together, and that's another factor. So the rental cars, the cost of the labor and the repairs, and then the cost for parts for autos has gone up like crazy. So those three things have added into a very pricey time for insurance companies to be fixing your car. And the third way auto insurance has changed in Lancaster, PA in the United States in 2022 is that new car prices are continuing to go up. We thought 2021 would be a spike and supply chain issues. 2022 has been right on the same path and gotten crazy expensive. So new cars in 2021 compared to 2022 have gone up 26%. So 26% in new car value, which is expensive and makes it more expensive for insurance companies to do what they do. So you have a new vehicle, you crash it, minus depreciation. The new vehicle, the vehicle that they buy for you to replace it for Kelley Blue Book value is, we see, even more expensive than what you paid for it a year or two ago. Where people crash a 2020 Chevy Silverado, we go to buy them a 2020 Chevy Silverado, and they're now $10,000, $15,000 more expensive than they had been when even they bought it, which is just crazy. And so that's another factor that plays into insurance and rates, is that new cars got crazy expensive. One of the coverages a lot of companies provide is gap coverage. So your loan or your lease, if you owe more than what the vehicle is worth, the insurance company will cover that versus you covering that. Well, in 2022, that was pretty much out the window because you bought it for this. The car appreciated. Cars have been one of the best assets to own, which is just wild. And so the gap coverage is almost not even worth it because the cost of your repairs of the vehicle a month or 2 or 3 after you bought it is more expensive. So gap coverage has kind of gone away or not even been needed because of just inflation has stepped in and taken that to crazy extent. So cars are going up, used cars are going up, new cars are going up, the price of vehicles in general are going up. And so that's the third way auto insurance has changed, is that it continues to get more expensive, whether it's a new car, used car, fixing a car, renting a car, any sort of thing. We all know stuff's getting expensive, and that's how it's playing into the insurance side as well. Hopefully that helps. Hopefully you learned something today. Hopefully 2023 is awesome. If you have questions about your policy, pricing, your coverages, what's going on in your own policy, feel free to reach out. Even if you're not one of our customers, we're happy to do an evaluation for you. Look at your coverages, look at your pricing, your vehicles, and see everything's in line and see if we might be able to help you save some money. So give us a call, check us out online. We're bringing clarity and simplicity to your insurance needs. See you next time.